Hello and welcome. This is Brandon Wendell, Chartered Market Technician, and I'm going to go ahead and do some analysis on the U.S. equity index futures, starting off with a weekly chart here of the S&P 500, and noted a head and shoulders formation that's actually broken if you use the neckline the way I have it here, using the bodies rather than the wicks. The wicks work too, but that's sloping downwards, and most head and shoulders slope upwards, so that's why I'm using the bodies. Anyway, we've crossed below the threshold of the neckline there on the right shoulder. As you see, we broke down from this kind of a weekly supply zone that was right here. And we had very little momentum. We couldn't even get into the bullish territory whatsoever, but we're also not below 40 yet. So if we get below 40, that's definitely a signal that, and this is the weekly chart, that would be the signal that the bearish trend is likely to continue and could make the measured move. Now, the measured move is typically the height of the head extended downwards from the break point. So that could take us down below 4,000, about 39.75 area, which really is the origin of some of that last buying pressure on the weekly chart. So dropping into smaller time frames, let me clean this up. Oops. The wrong button there. Sorry about that. Anyway, going into the daily time frame here, you can see that we're in a nice downtrend. We have lower highs and lower lows. We failed to make a new high a couple weeks ago as we rallied up in mid-February or early February. So it looks as though we're continuing our push to the downside. If we kind of shrink this down and use a Fibonacci extension based on the previous impulse and our correction that we had, and won't let me get to the top. So, sorry, I hit the wrong button. That's why. Again, highs to low to high, and that should give us our projections as to where our next pausing points might be. And you can see it's still in the same area around 39.75, 39.89, with a pause at 42.17. And I don't believe there's any sort of a demand zone nearby on the daily chart that could cause a little bit of a bounce. There's really not much here, and we go into the previous contract. So this could be pretty bearish, and that'll get us down quite a bit from the highs. See if we have a percentage measurement here from the highs. There we go. We go from the highs down towards this area, and it doesn't give me the percentage move, so I'll have to get that later. Anyway, but that would probably be, let's see, 48 down to 39. We're looking at about 1,000, about 900 points. So yeah, we're looking at a pretty good decline there in price, but there's nothing here saying that we can't get down there. There's nothing to hold us up. And again, we're in a downward trend. So if I go down to the 4-hour time frame to get some more detail here, there's nothing. Again, it's just bearishness altogether. We've made fresh lows. We've got more momentum to the downside. So it looks like this is ready to continue. There is no area of supply nearby to push us down and to re-enter into a new short. We have to look at a smaller time frame to kind of fine tune the entry, because again, we just have these bigger breakdowns, but there's absolutely no zone as far as an entry point. So going back a little bit, trying to find if there's any kind of demand that could pause price, I'm also not seeing anything. So I'm pretty much playing to the downside unless I see the trend is getting weak, which it has not so far. We have plenty of strength to the downside, and I'm not seeing anything to hold us up as far as a demand zone. So looking like it's going to continue to push down, at least, like I said, down to that 3,900 level, which is pretty bearish overall. And if we did look at the previous impulse here, correction, you can see that we just hit a measured move. This is as of Friday. And remember, we have a holiday on Monday, so we're going to have kind of a shortened market where the market will open up on Sunday and then close again for Monday's holiday, President's Day in the United States, and then reopen again on Tuesday. So we're at this little pause point. Might get a little pullback like we've already seen, but overall, very, very bearish. All we did was really retrace back to the breakout point. That's it. And it looks like we're going to continue to move down, and our next immediate target is 42.53, then possibly 41.90 before we get another bounce. So as of right now, everything is still looking extremely bearish. I'll drop down to the 60-minute time frame. And yeah, you can see we already missed the entry point. There was a supply zone, and we could look for new ones to form like this, but you had drop, base, drop that ended up testing on Friday and pushing down from that area. So that's what we retraced to. And again, just looks like we're going to continue to push downwards. We take a look at previous impulses. Kind of curious to see if this lines up at all with anything. Not really. The higher time frame zones are the ones that are going to be more effective, so I'm sticking with those. But overall, we missed an opportunity because it did already drop from supply. But look for new supply zones to form this week. And unfortunately, there's just nowhere else to get in as of yet. Like I said, there might be something on the intraday where there's opening range breakout opportunities and things like that. You can see that all these supply zones have been barely tested and worked very, very well to push us down. Even if I go down to a 15-minute time, oops, wrong button, 15-minute time frame here. Again, you can see the rally base drop, area supply. We tested that. It was on 60. So simply look for new zones to form during the week. Let's go out to the Nasdaq next and see what's going on there. There we are, and I'll go ahead and start off on the bigger picture, the weekly chart yet again. And there we are. And on the weekly chart, we see the fresh lows have been made. We don't have the same kind of formation as the head and shoulders, but lots of weakness, obviously, as prices are pushing to the downside here. So looking to continue that move, there's really not much of a demand to hold this up whatsoever. So again, lots of bearishness here. We can drop down to the daily time frame and again see that we're a decent downward trend. We are losing a little bit of bearish momentum as the RSI is signaling a bit sideways, but still a little bit lower than before with the lower highs and lower lows. We can take a look back to see if there's any sort of demand we're going to run into as we push down. Nasdaq's been one of the leading indexes to the downside. So let's actually go to the continuous contract. And that way we can see if there's anything else that we might run into as far as the demand goes. So going to the very end here, and again, cleaning up the chart. Put in a line at the current lows. And going back. Now we can see that there's not a great demand, but there is something that might work right here. There's a little bit of a it could be rally base rally. There's not very strong movement to the upside. It's kind of a wide zone altogether. But if you just focus on this little bit of a basing that you had right here with the rally to the upside, then you've got the 13,243 as a possible pausing point for the downward trend. I don't know if I would necessarily consider it to be a good demand. And then even going back further, well, you can see that that was actually a zone previously. So this has already been tested. And this would have been the origin of the zone. You had drop, base, and strong rally. You see the follow through to the upside already tested here. So we're likely to at least come back down to the 12,900 area before bouncing because that's the untested portion of the zone. But other than that, there's really not much to hold up price. And if we go to the current levels over here and we clean this up using the Fibonacci extension to get a probability of where we might turn, you've got impulse down, correction back, and you can see that this doesn't really line up with anything. We do have a little bit of a pause point right here, 14,434, and then 12,306. But again, there's nothing specific for a good, strong demand zone to cause price to bounce. And then we could get very, very bearish over the next several weeks. I know socioeconomically, there's a lot of issues, Ukraine and inflation, a few other things that are happening right now that are causing a bit of turmoil in the markets. And that looks like it might be continuing for a bit of time, at least in the immediate future. And again, just projecting from the previous impulses, you've got a couple of possible pausing points, 13,836, 12,956, and then 12,330, but there's no zones. It's kind of unusual. There's just nothing around as far as entries or targets. We may be forming a new zone here with a possible rally, base, and drop, but we don't have the second follow-through candle after the leg out candle yet. So we need to make another candle starting off on Sunday or Tuesday. Yeah, Monday's a holiday. That makes a fresh low here. And if it does, then we have rally, base, drop, or even drop, base, drop. So keep an eye out for that 14,381, 14,668 if we make a fresh low on our next candle. Going down to the smaller time frame, the 4-hour, as we fine tune this, there's actually a small area of supply possibly forming. Again, it hasn't confirmed yet because you have drop, base, and a good selling pressure drop, but it didn't have the follow through. So we did break out of prior lows, which is usually an indication of a strong area. And this is also kind of still here. You have drop, base, drop on the 4-hour time frame. That was the leftover from the daily. Let's go and fix that right there. And one of these two is likely to cause more selling pressure, although that could be considered a retracement or a retest of this area. I think this was actually the origin of the move down right there, which means that this is not a zone on its own, and we're more than likely going to be using the lower area of 14,156 to 14,299 as we push back down. And if we're looking at targets on this time frame, start off on this impulse down with the correction back, and then we've already hit target number 1. We're likely to keep moving down then to target 2, 13,631. If we can again form a little bit of supply, supply using that 156 as entry point with a stop above 14,300, targeting the 13,631 and ultimately 13,400 area. Going to a smaller time frame, 60 minutes, to fine tune some of the price action here. Well, we've already hit this little drop-based drop. You can see that it did work as supply already, so we may not be able to make it all the way back up to that 4-hour zone. We may just have to look for new zones, and I don't have anything right now. This is what I was referring to. You have a drop-based drop right there that formed on the 18th. Drop, one basing candle, and then the drop with follow-through already worked. And we're seeing lots of bearishness. One thing that'll be kind of interesting to watch for is if we make a fresh low, we got to breach this prior low from 2 o'clock on the 18th. Okay, so if we do that, we also need to see the RSI making a fresh low. If we don't, then that would be a bit of what we call positive divergence, and that could lead to choppiness and sideways movement rather than continuing to move to the downside. So keep an eye out for that as we breach that low of 13,906. We need to be making a new low on the RSI on the 60-minute time frame. Otherwise, we could expect a little bit of a bounce. Going all the way down to the 15-minute time frame to see where we might open up. I don't really have anything new here. Unfortunately, it looks as though we did have kind of a drop-based drop area that's already been tested, and therefore there's nothing new forming here. So just be patient, wait to see if new zones form, and take your opportunities as they come. Moving over to the Dow. Again, start off with the big picture, working our way down. The weekly of the Dow is now showing lower highs. We have not made the lower low yet, but we're very dangerously close to doing so. We've made a high right here where we could not get above 60, so that's pretty bearish when it comes to this market. It's likely to continue to push to the downside. Going into the daily time frame, we can still see lower highs, lower lows, so we're officially in a bearish trend. We haven't been above 60 in quite some time, as a matter of fact, since, well, beginning of the year. So since then, we've been in a bearish trend. And it looks like this bearish trend is likely to continue. We have a new daily supply, and this has been one of the stronger markets. When you take a look at the comparison between all of the equity markets, which actually I take you out to right now, right here, it's make an adjustment. But by going into the settings here and looking at a daily time frame, we can actually measure where we've been coming from. So from a percent change standpoint here, there we are, and we go to a daily time frame. If we start this study off on the 4th of January, that's where I want to start it off because that was the high of the markets, was January 4th. So starting off our study there, you can see our leader to the downside is the Nasdaq in red. See the color codes right here. Red for the Nasdaq, green for the Russell's number 2, and then the Dow is actually the strongest in blue. So if the strongest market finds supply and starts seeing weakness, then obviously the weak markets are likely to continue to crash. And that NASDAQ, as I showed you, didn't really have any kind of a demand zone below. It's likely to keep pushing to the downside. So looking at this Dow, we're seeing a rally-based drop. Supply zone starting to form. We still need one more new candle to make a low here. We have the leg out, but I need 2 follow-through candles to really call that a good supply zone. And it's quite wide, 34,558 to 35,060. So it's definitely a big zone, but that's the nearest area that I'm looking at right now. If we go down to the 4-hour to see if we can refine that a little bit, we actually can. We have rally-based drop right here. And that brings us down to 34,700, 34,960. Still quite a wide zone, over 260 points. Or 260 points total. You even have maybe drop-based drop forming here where this little leg out did breach prior lows after our sideways basing, but it's not complete. because we're still waiting for another follow-through candle. We only have one fresh low, and we did have a little bit of buying pressure to push us higher there. So this is not the strongest zone. The stronger zone's up above. You definitely had follow-through at that 34.7. It's just very, very wide and a lot of risk. As far as where we're going, we can look at two things. One, the projection down. And you can see that we are pausing right now at this first projection. So the next target would be about 33,515 with 33,095 afterwards. And if we look back, we can take a look to see if there's any sort of demand at all that we come into. And there's really not right here. Everything's already been tested multiple times. We go back further, and we find that there's actually nothing there. So we could have a pretty good move if we were to retrace. I'm actually looking more at the 34,700 than I am at the 34,237 because this hasn't confirmed yet, unless we go down to a smaller time frame and find supply, which we've already tested, unfortunately, so that may not work. You can see we had kind of drop, base, drop. It's very wide as well. We got a lot of volatility, so very wide zones, a lot of risk. That's why you have to go to lower time frames to kind of cut down the risk. So that you don't want to really put your stop inside of a zone. You want to be outside the zone to be safe. But you see drop, base, base, drop right there with follow through. It's just not a very big move, but it did work. It held us down. And it looks like we're ready to continue this march to the downside. I'm just not seeing anything else here. I go down to the 15-minute time frame, and it's all just the same picture. The only thing, you might have a little bit more refining of the zone. Technically, it's still all of this, but if you wanted to kind of just use these basing candles near the top, you can see it's already been tested. So we simply need to find a new zone to be able to enter and continue our move to the downside. So we don't have anything as of yet, but we still have lots of bearishness in the markets. And finally, we can look at the Russell. Going out to the big picture, the weekly chart, you can see this is a very weak index. It's been leading us very much to the downside. It looks like it's ready to continue. We take a look at the preceding impulse that has already corrected, see if we've got any measured moves that have already been made. Get the impulse down, the correction back up, and yeah, we did hit the 100%. So it looks like we're on our new impulse to the downside. And we are, oops, didn't quite get that right. Let's try it again. Impulse down, correction up. I'm not sure how much of a correction we had. It looks like it's about a 50% correction, maybe 61.8, depending on the measurement here. Didn't quite get it right. But there's 50, there's 61.8. It's kind of in between that area. And yeah, it wasn't exactly right, but it's right around the 61.8 if I were to bring this down just a little more. So you can see that that's what we retraced. And we are currently impulsing again to the downside as we make lower highs. We haven't made the lower low yet, but it does look like it's going to, and we should be making our way down towards the 1859 and even 1707. So if we go down to the daily time frame, we're so weak we couldn't even make it up to our area of supply. We have a drop-based drop, really good selling pressure up there. We just couldn't make it that high. The selling pressure took over. We were trying to go a bit sideways and we started breaking down. We actually did make a fresh low. The interesting thing is on this fresh low, just barely, I believe. Let's make sure. We had a low of 2000.4. The low here is 2000.5. So it was just one tick below, but we couldn't get below 40. So it may continue to chop and go a bit sideways unless we get more bearishness. I mean, the overall trend is a bit sideways or a bit downwards. This is just simply a correction up, but we could just go back and forth a little bit for a while in a sideways chop between this 2100 and 2000 area. Dropping down to a smaller time frame just to see if there's anything going on there. Again, I'm probably going to have to watch this week just to see what forms. But we do have rally, base, 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 and drop. And that took us to that fresh low. So we have the nearest supply zone at 2037.8 to 2049.2. We also have another area, drop, base, drop, right above there at 2057 to 2074. You can see drop, base, drop with the follow through we're looking for. So plenty of overhead supply. As far as targets and where we might go, as we take a look back, I really don't think we have much. And look back here, and you can see that nope, we don't really have anything until way down. And this is kind of a wide zone compared to the move up. Didn't really have much of a move up afterwards, but 1930.2, that's the last turning point that we had in price. And I don't think we have anything below this. Nope, that's it. So that may be where we're headed. And again, if we go back to current price, there we are. 1930 is our next target if we turn around from this 2037 area. If we drop down to a 60-minute chart to fine tune this and see if we can, oops, wrong button, sorry. If we can fine tune this and reduce our risk on the 60-minute time frame, I don't really see anything different, honestly. Now, this really was kind of drop-based drop that was already tested, so we may already be on our move to the downside, and even all the way down on the 15-minute time frame. The only thing we have is a little bit of a supply right here, but it may be a retest of a prior area. So again, I'm just going to stick with the higher time frame and wait to see if new zones form, or if we retest the 2037, look for the shorting opportunity down towards that target that I mentioned about 1930. So that's all I've got right now. So that's it for the look on the equity markets. It's going to look like either a sideways choppy week where we just go back and forth in tight ranges, or we break to the downside. I typically don't trade the breakouts. I'll wait for a retest of the breakout points and maybe just look at the opening range breakouts. If you're not familiar with how to trade those strategies, I actually have them all written up and videos on them as well in the E-mini think tank. So you can go ahead and contact me and get information on how to join me there. We meet 3 days a week on Mondays, Wednesdays, and Thursdays. Obviously, this Monday is a holiday, so it'll be Wednesday and Thursday this week. But it gives you the opportunity to interact with me and kind of discuss the markets as they're moving live. So until next time, everyone, trade safe, trade well, and take care.